You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. Once again, it is time for a little bit of the old TWIFO, a.k.a. This Week in Futures Options. My name is Mark Longo from the THEOptionsInsider.com, as well as from the network upon which so many of you have been mainlining. Welcome to all of our new listeners. You see all you folks coming in from all over the place. Could be crypto, could be the equity options landscape, could be learning about energy options or metals, whatever brings you to the dark side of options. We're here for you. Of course, if you like TWIFO, make sure you listen into the full network. A lot of great content on there, including a lot of great educational content. If you're newer to these crazy options things, if you like a little bit of what's trading, some unusual activity, then of course, the option block comes on twice a week for you. If you like crypto rundown on Monday, all things crypto. Volatility tomorrow, volatility views. So a great assortment of content out there for you on the network. And of course, if you want even more in your lives, you're ready to graduate to that next level, theoptionsinsider.com/pro is the place to go to learn more. Join what I have to say, maybe I'm biased, but one of the coolest communities out there in options. Just great people working together to have a great time, learn about options, improve their trading, ask great questions from some of the best minds in the world of options and derivatives, listen to some cool, unusual activity, come up with some of their own trades, give great feedback, all sorts of fun. theoptionsinsider.com/pro. You also win some fabulous prizes while you're there as well. It's a great time to be had by all, as it's time for us to have a great time here on the show. A little bit of the old Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. If you want to see this report for yourselves, it's one of the few premium reports you guys can get access to from our friends at Quick Strike. Just follow CME Group on Twitter, or, of course, follow us at Options on Twitter as well. And you can get access to this report. We usually put it out right before showtime, so you can see for yourself what's lighting it up this week. And this week is, I'd say, a 60-40 roughly week, maybe 65-35. It's kind of one of those weird split weeks, but we have more red on the screen than green, but it's not a dominant red week, listeners, not by any means out there. And of course, if we drill in a little bit further like we do here on the movers and shakers, we can have some fun. You know what? I'm going to surprise some folks. I'm going to kick things off to the light side this week. Everyone thinks I'm a dark side guy, but this week, mixing it up, to the light side we go. Number 5 to the light side, listeners, is soybean meal. So we're kicking things off in the ags this week, up 6.31%. And you know what? That one pretty active, 151,000 contracts on the tape right now, so we could certainly hang our hats out there this week. Number 4, off to the energy we go. You knew we had to go there, listeners. You knew we had to go there probably pretty quickly. It seems like everyone is fixated on energy right now, and for good reason. What's going on in the Middle East is top of the headlines pretty much for everyone out there. What the impact is on the energy market, of course, is a corollary to those tragic events, and how that impacts everything else, the equity markets and everything else going forward is what everyone is trying to figure out right now. We were just talking about it on the option block program earlier, and one of our cohorts there said if it wasn't for this Middle East stuff going on right now, VIX would probably be back down at around a 16 handle as opposed to where it is hanging out right now, threatening a 20 handle earlier this morning. So a lot going on out there. Powell having a little bit something to do with that today as well. But number 4, WTI, you don't need me to break down the volume. It does paper. 6.64% to the upside this week. Number 3, back to the ags, in particular the dairy. It's class 3 milk, up 7.57%. And you know what? It does decent paper, 9,500 contracts, all things considered. So you might be able to segue out there for a little bit of change of pace, hit some dairy. Number 2, one of our former frequent offenders, it's Bitcoin, up 7.85%. So Bitcoin banging away to the upside this week. It was number 4 in the other direction last week, off nearly 3%, 2.88% to the dark side last week. Before you get all hot and bothered, Bitcoin, 1,400 contracts on the tape right now. That's in the big contract. If we dial it down even further, look at the micro, 1,800 contracts on the tape. So still not lighting the world on fire from a volume perspective out there on the Bitcoin options front. And then number 1, back to energy, it's RBOB, up 8.74%. You might say, hey, you guys never really get to the refined stuff on the show. We'd love to talk about that on the show. Well, not going to do it today either, listeners, because only 171 contracts on the tape for RBOB this week. But it goes to show you how much energy is on the brain out there for a lot of folks. If we go to the dark side now, listeners, number 5, we're back to the ags. It is oats, off 2.8%. It was number 1 in the same direction last week, off 8.78%. So it's been a rough couple of weeks here for oats. And in case you're wondering, is this the week? Is this the week where oats breaks through and makes it onto the show? The answer is no. We just ran the numbers. 2 contracts on the tape for oats this week. So unfortunately, as much as we might like to sink our teeth into oats, not going to happen this week. Number 4, speaking of sinking our teeth into, maybe we'll sink our teeth into some livestock this week, in particular lean hogs. Lean hogs, number 4, off 3% exactly this week. They were number 2 in the same direction last week, off 3.77%. So a rough couple of weeks for lean hogs as well. And again, decent paper. It is a growing options concern out there on the livestock front. 60,000 contracts on the tape already this week. So lean hogs could definitely be a stopping point this week. I know everyone's got energy on the brain this week, but maybe a little bit of livestock might be a fun mix for you folks out there. Number 3, back to the sectors. It is the real estate sector of the S&P 500 this week, off 3.16%. We're starting to see more of these sectors creep on our radar. I'd love to have some options paper associated with them, but they're still pretty new futures products, so they're still growing their volume there before they light up on the options front. So a little way to go there, but intriguing nonetheless to see how they line up with everything else trading at CME this week. Number 2, staying in the sectors, it is the consumer discretionary sector, off 3.74% this week. So a rough couple of weeks here, a rough week for a couple of the sectors out there in the S&P 500. And the number 1 dark side mover, back to energy we go, listeners. It is nat gas, off 6.27%. It was number 1 in the other direction last week, north of 20% to the upside. So some crazy, tumultuous couple of weeks out there in nat gas. And indeed, everyone's fixated on energy right now. So I think we have to start there. First,
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, join me, will you, in talking a little bit of energy. Head on over to cmegroup.com/TWIFO, TWIFO/TWIO also works. That gets you here to our reports. In that asset class drop down, you're going to go down 3 slots to energy. They're going to kick things off in crude oil under the product family, and then in product, obviously, WTI. You can look at Brent on your own time if you like. Not going to do it here on the show today. Coming into the start of the show, we have WTI 88 and about a quarter. It puts it up nearly 2 handles since Monday, $1.91 or about 2.21%. Obviously, if you look back to the end of our show last week, WTI is up over 6, about 6.64%. So a banger week out here for WTI, hanging out at about 88 and a quarter right now. So we were talking about threatening triple digits not too long ago with our guest Carly. She was looking at it for the end of the year. Then, of course, we saw WTI lightening up. We saw the demand kind of lightening it up out there. Some of the inventories were surprising folks, and they were driving those numbers down. We got into the low 80s. It seemed like the option skew was kind of settling out around that level. And then, of course, everything started happening in the Middle East. And once that happens, all bets are off in the energy market, listeners. A decently active week, perhaps not quite as explosive as you might have thought. Maybe you would have thought, given the headlines, we'd be at 750,000, maybe even 1 million contracts in WTI. If you've been listening to the show for a while, you know an average week is somewhere around 400,000 contracts. So we are more active than that. Over 500,000 right now, 513,000. Just not blowing the doors off this week. And in terms of where that paper is lining up, 47.2% is going up in the Dees contract that has about 27 days to go. So we're going to head out there as well, listeners. And again, it's a nice refreshing break from the obsession with 0 day. I get it. It's cool. It's fun. It gives you a lot of options, pun intended, for different ways to play earnings or event risk or anything you want to play out there in a very short, limited risk, limited duration fashion. But, you know, nice to go out a little bit farther, too, and see what's cooking out there. So we're going to do that right now in WTI. What is the volume? You might be asking yourself in December WTI. It is 42 and about a third off, a little over 2, about 2.1 points on the week. So vol actually coming in the Dees contract. Skew-wise, not a ton of evolution week on week. Last week, the puts were 3.7% cheap, so a slight discount to the puts. This week, 3.8% cheap, so pretty much treading water. The calls getting a little bit juicier, but not much. The calls, 7.4% bid. Last week, 9% bid this week. So that is interesting to see that we're hanging out in the high 80s, threatening a 90, and there still is a market bid to the calls and growing a little bit juicier this week. So read into that what you will. Skew is not always a crystal ball, listener. Skew is not going to tell you, okay, the calls are bid, so crude oil is shooting up. It just tells you that's where the overwhelming amount of interest, concern, sentiment, call it what you will, bias, is hanging out on the upside right now. So intriguing stuff. Speaking of upside, this might explain some of it, listeners. The number one most active contract out here in WTI, pretty much across a lot of months, was the par strike, the 100 strike, listeners. In particular, the Dees 100s going up 21,500 times this week. Active pretty much every day of the week. 3,800 on Monday, 6,000 on Tuesday, 6,200 on Wednesday, 5,500 today. Total OI on the strike of 43, almost 44,000. A total of about 21,500 have traded this week. Opening seems like all week long, so it does seem like folks are piling into those pars, which again would explain why the call wing has not only remained bid, but got a little bit juicier over the course of the week. And I said the pars were active across the board. If you go out to February of next year, they did about 6,000 contracts. The pars in March did 7,000 this week. The pars even in September of next year doing about 1,200 contracts. So the par calls definitely leading the dance out there this week by a country mile. If we roll off from those, we can look here. The next most active strike also to the upside, the Dees 110. So if the 100 strike in 27 days, if that doesn't interest you, then how about the 110 strike in 27 days? 13,500 of those going up this week. Looks like, unlike the pars, which were active all week long, the 110 seemed like they were mostly concentrated on Monday and Wednesday. 7,700 on Monday, 4,100 on Wednesday. Looks like opening all week long, again, a total of about 13,500, which is right around half of the OI, which is about 27,000 on that strike right now. So intriguing stuff. Doesn't seem like there's any rolling going on because they were opening on both strikes pretty much all week long. So no one's taken off the pars and rolling to the 110s. Also, it'd be a little early for that. But again, we've seen crazier things unfold out there. Then how about splitting the uprights? How about the 105 strike doing a little bit north of 13,000 contracts this week? That one, again, weird flow on all these strikes. That one trading mostly on Tuesday and Wednesday, 5,000 each, pretty much both of those. 2,000 on Monday, 1,000 today. Opening again all week long, and total of a little over 13,000 on the week. The OI right around 21,000 coming into today. So a lot of opening paper just par and above here in Dees WTI this week. And again, weirdly, trading different days for different strikes all over the place, which is also kind of fascinating. If you wanted some puts, there are some to be found. The 75 puts, that again, an interesting strike out there as well. The 75 puts doing about 11,500 contracts this week. So that is definitely the most active put contract out here this week. And the most active day for those, 3,800 on Tuesday, 3,700 on Wednesday. So neck and neck Tuesday and Wednesday. About 2,000 today and about 2,000 on Monday. It looks like opening all week long. Again, a total a little under 12,000 on the week, and the OI is about 22, almost 23,000. So activity on these 75 puts as well. Are folks selling those to finance their pars? The skew, it hasn't really budged, so you could make an argument for either direction really on those puts this week. I wouldn't be surprised to see that, but then again, you have a lot of people out there who are producers and end users and refiners of crude, in which case they need to hedge, so could be loading up on those 75. 75 is a bit of the way out there, though, in terms of strike. This was a couple of weeks ago. We were hanging out at the low 80s, and I could see a lot of interest in the 75. Going down 13 handles in the span of about a month. I mean, we've seen crazier things in WTI, that's for sure, but an intriguing strike. What do you think, listener? You think they were up to selling, maybe to finance some calls? Was it unrelated buying paper on the puts? I'm curious. Hit us up, let us know. If you want a little bit tighter hedge, how about the 85 puts? They traded 10,500 times this week. The big day for those actually yesterday. 3,300 yesterday, 2,700 on Tuesday, 2,300 today, 2,100 on Monday. Again, it was opening on everything I just broke down. Every single day opening on all those strikes, all those options. So just a ton of opening paper in December here in WTI, which again reflects the fact that everyone is fixated on energy right now. If you see some closing, you might expect to see a little bit of rolling out here or something like that. Doesn't seem to be lining up that way at all this week, listeners. Again, a total of about 10,300 on the week, and the OI on this strike coming into today is over 25,000. So a lot of paper open on those are on the 80 puts. The 85 puts is about 10,500 traded this week, and is about 17,000 on the OI side. So activity for days opening in both directions in December, which again leads to a very active week. Let's just scroll really quickly because usually there's some interesting and or aberrant stuff a little bit farther out. I already related to you the pars that are pretty active across the board. In January, it looks like the 105s are also pretty active as well, to the tune of 9,500 contracts. 2/3 of that, 6,300 going up on Wednesday, mostly opening. It's like somebody took about 3,000 off on Monday, then nothing really traded Tuesday or today, and then someone put on 6,300 on Wednesday. And that's the entirety of the week for the Jan 105s. And a total of about 8,900 are open on this strike. So interesting kind of across the board paper here for the 105s in January. So we're kind of splitting the uprights. If you do want to find some funky put paper, how about the Dees 2024 65 puts going up about 3,300 times this week. 1,400 today, 1,100 on Wednesday, 600 on Tuesday, 100 on Monday. So they were trading all week long, which is interesting. Even just the 100 lot on Monday, all opening all throughout the week. The OI on this strike is a surprising 11,500. So new paper pouring in to the Dees 2024 65. So talk about a dichotomy of outlook, listeners. How we got the pars going up for size and 105s and 110s Dees of this year all the way into Jan and February and March of next year. Then get to the end of next year, the Dees 65 puts lighting it up. Not a ton, 3,300, but still more than you would expect. What would it take to get us back to 65 by December of next year? An intriguing story, but since we're hanging out in energy and everyone's fixated on all things energy, listeners, we also have to talk the other side of energy, which is another one of our frequent offenders here on the show. It is nat gas. Again, go into that drop down, pop out of crude oil, go down 2 slots to natural gas so we can begin our journey there this week, listeners. Nat gas hanging out a little bit shy of the 3 handle right now, 296 off about 27 cents this week. So nat gas giveth and nat gas taketh away. That's why when I was joking with Carly on the show recently about people getting into nat gas, she often advocates to maybe stay clear of it. It's a very volatile product. And we're seeing that exhibited again this week. In terms of paper, yeah, it was a banger week. Usually we see 400, maybe 450 on a pretty active week. This week, 763,000 contracts on the tape. That's the kind of paper I was expecting from WTI. Instead, we have it here in nat gas, no doubt in small part due to the fact that it's moving quite a bit. So hard to blame folks to put out some paper when the underlying is moving, 8.5% just since Monday, listeners. So a very active week in nat gas. Of course, you go back to the end of our show last week, it's off about 6.25%. And not to be outdone, nat gas doesn't really have a daily option, and they don't really have a weekly, but they have a monthly that's expiring in a week. So right now, it's like effectively having a weekly. We have the November contract, which is going out in a whopping 7 days, doing 47% of that 763,000 contracts. So nat gas doing its best equity approximation out there this week. And everyone loves 0 day. And if you go out 3 or 4 days in the E-mini S&P 500, you've covered pretty much half of the paper. Now we have something similar, 7 days, 47% of the paper in nat gas, which again opens up the conversation we've had before on the network. Do we need more weeklies and short duration contracts and potentially eventually dailies out here in nat gas? The paper would seem to warrant it out here with 47% of 750,000 contracts going up in the contract that expires in 7 days. What is the vol out here? 54.5. Again, vol with a weekly contract. You've heard me before. I won't belabor it. It's a lot of gamma, but hey, we won't get into that conversation right now. Off about 2.5 points. If we go a little bit farther out, let's say we go out to the beginning of next year, February or March, contracts that have about 100 plus days to go. The vol out there is closer to a 70, so maybe read into that a little bit more, what you will out there. In terms of the skew on these near-dated contracts, the puts are 2% bid. Last week, they're 1% bid this week. The calls last week, 0.4% bid. This week, 0.6% bid. So the skew not really evolving on the week, which is kind of interesting given the big underlying move we're seeing out there. Let's go a little bit farther out. Let's go to, man, once you get beyond the front couple of contracts, the D's contract did 20% of the paper. So those two, 67%. So pretty much 2/3 of the paper right there. The rest is just scattered. So let's go out to D's then. And the vol there about a 58. And the skew out there, the puts 1.8% cheap last week. This week, about 5% cheap. So the puts getting a wee bit cheaper. And the call, 6.3% bid last week. This week, 8.9% bid. So people bidding up some calls, hitting some puts, maybe showing us that maybe the sell-off has reached its downside nadir and we're starting to look for a little bit of reversal out there. I don't know. Intriguing stuff. Let's get into some of the paper, listeners, see what we're seeing out there. Right now, the most active contract, we're hanging out almost exactly at the 3 strike, 296 right now, listeners. So no surprise. It's the 3 puts expiring in 7 days that are leading the dance this week with over 46,000 contracts. That's talking almost as much, talking almost double, really. All of the paper in the entirety of the silver complex just in these 3 puts in nat gas. So a pretty active week. The big day for these, Monday, 22,000 going up on Monday, mostly opening there. Tuesday, 13, almost 14,000, again opening. Today, 7,000. Obviously, we don't know the action today. And then Wednesday, 3,400. Looks like slightly closing on Wednesday. Total volume on the week, 46,000. And the OI coming into today was 36,000. So a robust week for the 3 puts, which again makes sense. Last week, we blew through them to the upside. This week, we're blowing back through it to the downside. Makes sense that these psychologically important levels are going to dominate the tape. Then right behind it, we have pretty close to a tie, 29,000 each of the 290 puts and the 3/2 calls. Looks like the 290 puts doing a little bit more, a couple hundred contracts more. So we'll start there. The 290 puts doing, again, total of 29,800 contracts this week. The big day was Tuesday, 10,400 on Tuesday, opening there, 9,100 today, 7,300 on Monday, also opening, and then 3,000 yesterday, slightly opening there, again, for a total of almost 30,000 on the week. And the OI, 16, almost 17,000. So intriguing stuff there. And then right behind it, 29,200 of the 3.5 calls going up this week. The big day for those actually Monday, 8,500 on Monday. Actually, I take it back. The big day for those was Wednesday, 9,400 on Wednesday, slightly closing there. And then 8,500 on Monday, slightly opening. 6,300 on Tuesday, closing there, and about 5,000 today. The total OI on the strike right now, 26, almost 27,000 there. So 3.5 calls, 290 puts, and of course 3 puts leading the dance out there in nat gas. Let's scroll a little bit farther out to see what we can see this week. A lot of people like to know about the put strip. This week's strip is the 2.5 put strip going up. Looks like about between 4,000 and 5,000. Actually, it looks like different sizes, which is surprising. Usually it's the same number on every month. We have 4,050 going up, for example, in the July 2.5 puts. Then we have 4,051 on the June. So a little bit different volume going up here on the week. So 2.5 puts, those are our strip du jour. And then let's see, right behind it, if we go out a little bit, if we go out to the D's contract, the most active contract out there are the 2 3/4 puts, going up 21,000 times, the big day for those. 6, almost 7,000 today, and about almost 7,000 on Monday as well, almost slightly opening there. 4,600 on Tuesday and 3,400 on Wednesday. Seems like opening all week long, and the total OI is about 17,000 on that strike coming into today. So a lot of action out here in nat gas. Of course, if we get into next year, we have all that seasonality kicking in, and we're looking at nat gas in the February and March timeframe of around 3.25 to 3.5. So obviously a little bit juicier out there. Then we get into, of course, the end of the year next year, and we have more seasonality kicking in. Now we're looking at 4.25, a D's of 2024. So intriguing stuff across the board here in nat gas. We could probably do the entire show on energy, listeners, but we won't. We'll keep on rolling. Looking at our movers and shakers this week, there also was some action to be found out there in the world of ags, in particular in the beans and in the livestock. So I think we'll head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the world of ags we go. It does seem like a broken record on the show the last couple of weeks. It's ags and it's energy. Those are the two things dominating in both directions, it seems like, every week. So to the ags we go. Like we said, soybean meal lighting it up to number 5 to the light side, up 6.31%, and a pretty robust week, 151,000 contracts on the tape. So we're going to head out there, listeners. Get into the ags, drop down, go into grains and oil seeds, and then go down about 4 slots to soybean meal. Again, 151,000 contracts on the tape, 41% of that going up, and the D's contract has about 36 days to go. We're going to hang out there. Front month beans are at 423.30. In case you don't pay attention to the beans, listeners, up about 33.3 points just since Monday, or up about 8.5% just since Monday. So very action-packed week out here for soybean meal. Skew-wise, well, before we get there, let's look at the vol. Volatility-wise, soybeans, D's contract hanging out at almost a 26, 25.90, up a little over 3 points on the week. So that's fairly juicy, considering we've seen mostly anemic vol across the board in most asset classes outside of energy. Even equity is looking pretty anemic right now. So 25.90, almost a 26, nothing to sneeze at these days from a vol perspective. Skew-wise, also seeing some action out here. So, hey, if you wanted some vol and a little bit of skew action, I guess you could do worse than checking out soybean meal. Last week, the puts nearly 10% cheap, 9.9% cheap. And the calls were 3.6% bid. So you had a nice cheap put. Not quite a super juicy call, so it wasn't like it was a super juicy collar, but it was a decent setup for a collar. This week, if you missed that, all of that is gone, listeners. The puts are now 1.9% cheap, so they've come in 8 points. And the calls are 0.8% bid, so pretty much flat. So the premium to the calls is gone. The discount to the puts is mostly gone. So that interesting setup from last week has vanished. And what do we have this week in terms of action? Like we said, 41% going up in the D's contract. And the most active contract this week, we have the 430 calls in December. So the pretty much slightly out of the money calls going up 10,000, almost 11,000 times this week. The big day was Wednesday, 5,000 contracts on Wednesday. So half of the paper going up there, slightly closing there. 3,000 on Monday, slightly opening there. 2,000 today, and only a couple of hundred on Tuesday. So 430 calls leading the dance, followed by the 390s. So fairly in the money calls, taking the number 2 spot, 7,500 contracts there. The big days there again, Wednesday and Monday. 3,600 on Wednesday, slightly closing. 3,200 on Monday, slightly opening. By the way, the 430s have about 4,100 contracts open right now, and the 390s have about 2,400 contracts open. So interesting stuff. And right behind it, we have the 380 puts going up 6,300 times this week. The big day for those, pretty much all of that going up today. 5,200 contracts going up today, and the rest kind of scattered throughout the week. So, yeah, pretty much an explosion of 380 December puts going up in soybean meal today. Let's scroll around a little bit, see if we can see any other interesting and/or aberrant paper. How about the 390 puts going out in a little over a week, going up 5,500 times? The big day for those is today, 2,500 today, 1,500 yesterday, slightly closing, and then 1,300 the day before, slightly opening. Worth noting, today's paper clearly opening. There's only 760 contracts open on this strike, so a lot of back and forth paper on these 390 puts. Do we, dare I say it, do we need a daily? We do have a contract expiring in 1 day out here, listeners, and let's see what's active out there. It's the 410 calls, so these are in the money calls. We're at 423.30 right now. The 410 calls trading 500 times today, 1,000 times yesterday, 600 times on Tuesday, a goose egg on Monday. The total of about 2,100 contracts on the week, and the OI is 637. So today's paper sneaking right in there in terms of the OI. But intriguing stuff, like mostly closing throughout the week. So some folks taking off these 410 calls this week. Kind of interesting considering we have blown through that strike now. So intriguing stuff. If anyone was wondering, and we've talked about this before, do we need a daily in ags? Ags are one of the few contracts where we really said they don't seem suited to the structurally. The need for 0-day paper isn't really there outside of, let's say, crop report days and a few other specific event risk times. But there you go. There's a 1-day contract, and it's actually doing a little bit of paper today. So maybe that puts the rubber to the road of, hey, maybe we do need a daily out here in the ags, listeners. And we'll wrap things up this week, listeners. Kind of a Just the Facts, ma'am edition, doing a quick sojourn out into the livestock. We don't get out there too often, listeners. And of course, we had lean hogs coming in at number 4 to the dark side this week and looking pretty active. 60,000 contracts on the tape. Where are lean hogs trading right now? You might be asking. Almost a 68, about a 67.97. That puts them off about $1.50 on the week, or a little over 2, about 2.2%. Of course, you go back to the end of our show last week, they're off exactly 3%. And of that 60,000 contracts, 67.4% going up in the D's contract, which is the front contract. So lean hogs, kind of the opposite of 0-day. Not only do they not have a weekly or a daily, their front contract doesn't expire for almost 60 days. So that's the nearest dated paper you can get right now in lean hogs. So they're playing a very different ball game in the livestock, listeners. In terms of vol, what is the vol in the front quote-unquote month? Even though it's a couple months away. The front month Dees lean hogs, it is 25.5, off about 0.75 of a point. So again, respectable in this kind of anemic vol environment right now. In terms of skew, man, we had some skew action last week in the lean hogs, listeners. My goodness. The puts last week, 10.7% bid. The calls, 19.1% bid, so they were pricing in some action. My goodness. Wow. Seems like that might be good iron fly, iron condor territory. Buy the guts, sell the wings for extremely juicy levels. Seen worse setups out there. All of that, of course, is gone this week, listeners. The puts are pretty much flat. The call's 4.4% cheap. So whatever juice existed in both directions last week is now gone in the lean hog. So they were pricing in some action last week. I mean, we got a decent amount of it, off a little over 2%. So we got some action, maybe not as much as they were pricing in, but intriguing stuff nonetheless. In terms of action, like we said, 67% of the paper going up in the front Dees contract. It was the 102 calls. So my goodness, 102 calls. We're at a 60, almost a 68. And it's the 102 calls in December that are leading the dance with 2,500 contracts. All of that printing on Wednesday, listeners. And all of that opening. That is the entirety of the OI on the strike. So someone opened 2,500 exactly of the 102 calls on Wednesday. Were they taking advantage of that ridiculously juicy skew and just blasting away at the 102s? I'm looking here for the rest of the paper. We saw the 70s trading that day as well. So 70, 102, and they went up 766 times. So it doesn't really line up strike or volume-wise, but that's what went up that day. It would be weird to have an even volume, 2,500 of the 102s going up, and then a strange number of something else. And also the strikes are strange. Everything about it is strange. But there you go. That's our most active trade. That's why these products are so fascinating, listeners. Did you have the 102 calls expiring in roughly 60 days in lean hogs by that time? Did you have that on your bingo card? In which case, you are far more in tune with the livestock than I, listeners. But there we go. I might have to dig into the tools a little bit after the show, listen, to see what folks were up to on that. Of course, if you have the futures in your back pocket, you wanted to overwrite some of those, maybe to take advantage of some ridiculous premium out there. That can make some sense. Either way, that skew in the call wing has collapsed, so it does seem like we have either the event risk is gone, or we also had some obviously crazy selling paper to take advantage of it. Maybe a little bit of column A, a little bit of column B. Let's just look really quickly, listeners, before we get out of here for this week. See if I could find exactly what they were up to. Checking out the block tools here as well, listeners, on the old quick strike. I don't see any size options blocks going up in the ags. I see some futures blocks in lean hogs and in feeder cattle, but nothing on the options side for blocks in lean hogs that would explain this mystery block of 2,500 going up on Wednesday. There you go. Some of the mysteries of lean hogs, listeners. All right, that's going to do it for this Just the Facts, ma'am, edition of TWIFO. I say that, but we went almost 40 minutes anyway. I can't stop talking about these products, listeners, and I am still scratching my head over that 2,500 lot of the 102s in December in lean hogs. I need to do a little bit more digging in this massive array of tools here in Quick Strike to see if I could ferret out exactly what they were up to out there, listeners. But fascinating stuff across the board. I hope you had a fun time with me on the show today. Don't worry, next week we'll have more people rotating through the old CME Group hot seat. I like to take a break every now and then, just kind of dive into the activity here on the show. Of course, back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things vol. We'll also have some live updates from the CBOE Risk Management Conference, so that'll be fun. Giving you an update on all the latest presentations, the talk of the town out there. We had some of that on the option block already with the Flowmaster. We'll have more of that tomorrow on Volatility Views. We'll also be joined by our guest, Chris Sidial. And then afterwards, for all of our pro folks, we'll be back for Options Oddities. If you haven't checked out the pro right now, man, you're missing out. TheOptionsInsider.com/pro. If you're ready to take your trading to the next level, arm yourself with some of the best content out there. Only one place to go, theoptionsinsider.com/pro. Then we're back again next week with our usual array of content all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.